Good morning, trading world. It is November 29th, 2021, 7:10 a.m. Hope everyone had a great Thanksgiving holiday, and now it's back to business. Last week was a concrete sign that the intermediate trend has changed. Using the 1, 2, 3 criteria, we looked at a 90-day 4-hour chart and showed where that trend had actually changed. Today we're going to look at a longer term trend. We're going to look at a 1-year daily chart. If the longer term trend breaks and you're on the wrong side, fortunes will be lost. However, if you're on the right side, it's possible to make a fortune. Let's get to the chart. All right. On this 1-year daily chart, I've already have a trend line drawn. As we can see here, we see where the trend line breaks. That's the number 1 in our 1, 2, 3 criteria. The break of the trend line right there. Then sorry about that, had to do a brief pause on the video, but picking up where we left off, the number 1 in the 1, 2, 3 criteria we have this trend line break. This line here is pulling forward the high that we established before the trend line break. And one thing that we're looking for in this 1, 2, 3 criteria is that clearly we've been in an uptrend. So one of the things that we're looking for in this 1, 2, 3 criteria, and number 1, is that we've ceased making higher highs and higher lows. As you can see right here, this was the last high, but we're not sure whether this is the lower low. So we're coming in today, tomorrow, this week to see, to see whether, or to establish a minor low. This could be it, or it could be a little bit below here. But looking forward into the pre-market analysis, there is a rally on the schedule about to happen. So this could very well be the minor low that we established before we take off to go retest the high up here to put in our number 2. So we'll come back to this in the pre-market just a little bit later. But for now, looking at the chart, it has to be forewarned that in conditions like this, there will be violent market moves. And when I say violent market moves, I'm talking bursts, not just to the downside, but there will be sharp, almost even more explosive moves to the upside. And that's something that is a key clue in these trend change events in this process. So you have to be very careful to look out for. So one of the things that I'm always looking for to keep me on the right side of the move is usually I don't want to take a move until I get divergence. If it's going to be a swing position, then I need to see divergence based on the time frame that I'm looking for that swing position, not just the intraday chart that I'm looking and trading at the moment. So that's pretty much what we have to get used to right now, because this market could get pretty violent. One of the things that I'm still not sure of, because this is a process, we've gotten concrete evidence that the intermediate trend has changed. Doing this process for the longer term trend, it could still carry out this process of changing the trend all the way to the end of the year. We still have some stubborn money managers and hedge funds that probably don't want to give up gains right now because it could possibly interrupt a huge bonus. So in my eyes, that's probably the only reason we hadn't fell a couple hundred points already, because the signs have been there. But between money managers not wanting to give up on a chance to get a bonus, and then retail buyers that know only one thing, and that's to buy the dip, this market just refuses to give up and continue trying to chug along. But the evidence is here that the days are numbered. So we never want to kind of blind ourselves to what's going on. That's one reason I say I come in every day, go through my technical analysis, and I trade what I see for that day. So I try not to be too strong one way or the other. I'm definitely not a perma bull. I'm definitely not a perma bear. I try to come in and as unbiased as possible and trade what I see that day. And if you can do that, you will fare a lot better and live a lot longer in your trading career. Now, let's get to some of the key levels here, which could kind of play a key role in us establishing the bottom or the minor bottom in this 1, 2, 3 criteria that we're using. Once we establish this bottom, I'm going to draw another a line just like we have here at top, pulling forward that low, and that will be a key sign that the trend has changed. Once we cross back down through that line, that will be our concrete sign that trend has changed on the daily or longer term trend. So let's get to key levels of what I will be looking for in today's trade. All right, let's go through the key levels of support and resistance for the next couple of days, or for at least today. What we're looking at, key levels of support, are going to be the 455 area, 454, and at the extremes 451. Not sure how this is quite going to play out. Let's go visit the levels of resistance. We're going to have 463, 465, and 466. Now, I have a level drawn at 460. 460 is going to be the battleground in the middle. So what we have coming out today is that we could likely see a scenario where we get it's going to be hard to describe it as a trend up type day structure, but it may very well be. Looking back, the previous close was at 458.97. So it could very well be that we hold that 458 area, but it's also quite possible that we retrace through some of the overnight lows. And the reason that there is such confusion about where we retrace to is because we had a half of a day session on Friday. So we closed at 458. 458.97, somewhere around there. But after the close, we kept drifting low. So that's where we have this kind of drift down to this 456.86, which was the overnight low. But as you can see, most of this was not done in the overnight session. It was done in the continued session after the close. So it's a bit confusing to see that we actually closed back in this area, but it kind of continued out throughout the rest of the day, and we got this low of 456. So the way I see it coming into the day, we're going to get some retracement, and we should retrace some of the overnight lows. So again, the confusing part is the overnight lows could very well be this 460 area, but that half a day, this kind of no man's land of trade, took us all the way back down to the 456 area. So this is going to be very interesting to watch. Keep an eye on your divergence for your indicators, because we could very well find support at 460, could be 458, then also 455. So again, keep an eye on your divergence, but we could get this retrace into here, find some sideways chop movement, and then power up to go test and find resistance for the day. So that's pretty much how the day could possibly play out, but still, to me, I'm going to be watching the internals and my indicators very closely to find this divergence to confirm a place to get long. And this will definitely be a intraday long, even though I do see that we could rally for the next couple of days, or at least today and tomorrow. It's very unnerving for me to hold any long overnight during this time period. Especially right now, where we're trying to establish whether we're going to continue the uptrend, or the longer term trend is now going to become down as well. I'm pretty much not interested in holding anything overnight until we establish that evidence. And I will hold a short, but it won't be today. I could possibly look at it tomorrow, holding a longer term swing. And I'll only hold that longer term swing trade or enter into it if I get the proper signs at the end of the rally. And one of those things is going to be if we establish or get to a point where I can see that we're retesting a previous high somewhere around this 466 area, and we fail there, and we show overbought in unison on not only the 4-hour chart, but also the hourly and 30-minute at some point when the 4-hour reaches that oversold territory. But then also, since we're looking for a failure here, one of the key things to look for on your indicator, because I do believe in cycling, what is likely to happen is that once we get back down, if you're using a RSI or something like that to determine market strength, it's possible we may not see a full cycle here. So I'm going to look for a failure on the RSI, where you get your 30-minute and hourly turning over before they make a full cycle. So that's going to be a key thing to look for. And that would be another sign to identify that we're not going to break back through the preceding high. So those are the levels, and one of the things that I'm going to look for let's see if I can go back here on the chart to see. There's a lot of buildup in this area at 469. So even though we have a high of 473, it would not be surprising to me if we get a failure anywhere between 468 and 470. This is going to be that area to keep an eye on. Let's say this shaded area is going to be where I wouldn't be surprised if we don't even make it back up to really test the preceding high, but we just get a test of this area here and we roll over from there. So don't be surprised if that's actually what's happened at some point this week. We get the rollover there and we can put the number 2 on our 1, 2, 3 for this daily or longer term trend. So that's pretty much it. And during this time frame, like I said, during conditions like this, if you're on the wrong side, fortunes can be lost. However, if you're on the right side of these moves, fortunes can be gained. And with that, I just want to caution you, don't try to overcompensate by doing a huge or bigger sizes that you're not used to handling, because this is definitely not the time to play around. And I want to place an emphasis on doing very defined risk trades. And what I mean by defined risk is that you know exactly what your loss could be if it goes all the way against you. And the biggest thing that I will be using during this time is going to be put verticals, because I'm looking at this thinking short. If we wasn't in the midst of a trend change, I wouldn't mind doing a call vertical to take advantage of the next 2 days on the rally side. But when it comes to this, I don't feel comfortable holding any longs overnight. And until we get up into this area where there's a possible retest that could tell us whether we're going to fail and roll over, I'm not even doing or holding shorts overnight right now. Because in this area, it's just too dangerous. If you hold anything or take positions in this area from 464 down to 460. There's no telling where we could end up later on this week. We could end up here in the 470s and you definitely just blew out that trade. Or we could end up down here below 450 somewhere and you've blown out the trade to the short side. So it makes no sense until we get to an edge to hold anything overnight. So that's pretty much my logic and what I will be doing. Wishing you the best, hoping you have successful trades and you're on the right side of these explosive moves that could be coming. And as always, you have a great day.